Today we're going to look at the cash book. What is cash book? Cash book is a part of journal. It's a special journal that record only cash transactions. The transactions that are cash in nature are recorded in the cash book. So there are three main types of cash book. The one column or columnar cash book. We have the two column or double column cash book. 3, we have the 3 column cash book. We also have petty cash book. But these are the major types of cash book we have. After this, we'll look at the petty cash book. So, cash book, as I've said, is record only cash transaction. Those transactions that are not cash will not be recorded in the cash book. So, this one column cash book, double column or 2 column cash book, the 3 column cash book are all the same. But the difference is in 1 column cash book, we only have 1 column, just as the name implies. That is, we have only the amount column. And in 2 column cash book, the amount will be split into cash column and bank column. And in the 3 column cash book, we will have our cash column, bank column, and the addition of discount. So this is what makes it to be 3 column cash book. So we are going to look at the 2 column and the 3 column because they are the examinable types of cash book. The 2 column cash book or double column cash book and the 3 column cash book. So let's begin with the 2 column cash book. With the 2 column cash book. And again, there is a column for debt, is a general, and there is the column for folio, ledger folio, and is general. So what I mean is general is it's not part of the description to say the columns are 2 or 3. They are constant. That is what I mean. So now let's look at the 2 column cash book. The 2 column cash book. This is the 2 column cash book. We have the debts. This is credit side and debit side. We have the debts, the particular or details. We have folio. We have cash and bank. We have the debts. We have particulars. We have folio. Folio is just an indication to tell you the number of or the place which the transaction or the ledger falls in. And here we have cash and bank. That is it. And here we have our dates. We have dates. We have particulars. We have folio. We have cash and bank. Very simple. Dates, particulars, folio, cash, bank. So what I was saying is, what makes this to be two-column cash book is the cash and the bank. That particular folio are constant columns. That particular folio are constant column. But cash bank makes it to be two-column cash books. 1, 2, 1, 2. So this is the format of cash book. As you can see on the board, this is the format of two-column cash book. So we have an activity here that is a question to solve using this two-column cash book. This cash book is our simplest accounting entry. The entries to cash book are very simple and easy to understand. But just pay attention, listen to what we're going to tell you, you will get it all, you understand everything. So let's continue. Cash, these are our transactions. And activity 1, that is the transaction. So the cash book of XYZ Limited, July 20XX. These are the transactions that the company has. Now, cash and bank balances. 1st of July. Cash and bank balances. $20,000, $30,000. This is for cash and $30,000 for bank. So you will say 1st of July, it's already July, particulars, balance BF, brought forward, balance BF of $20,000, and for bank $30,000. So don't forget your currency sign. Your currency sign, which is dollar. Your currency sign and your currency sign, dollar. Okay? So this is telling us that the balance brought forward is a debit balance because the amount, $20,000, is not in bracket. If to say the amount is overdraft, then it will be at the credit side, that is the credit balance. But the balance, we are bringing it now to the cash book, is a debit balance because it's not an overdraft. The second transaction is cash sales. In accounting, whenever we say cash sales, we mean you sell and you will receive cash. So this is a debit transaction. It's a debit transaction because we sell and we receive cash of $16,000. Now we sell and we receive, that is debit. What are we receiving? cash. We receive cash. So in your debit side, definitely you are going to debit whatever the amount is at the cash column because you receive cash. That is very simple. Now, since we receive cash, debit transaction, on the second, we receive cash of how much? 16,000 of $16,000. We receive cash of $16,000, and it was as a result of sales. We sell and we receive cash. Very simple. Then you are done with this second transaction. The third transaction, 3rd July, says we received goods from Gerard, $6,000 check. We received goods from Gerard, $6,000 check. So here you have to be very careful. We are not receiving cash. We are receiving goods from Gerard, $6,000 check. That is, we are paying for these goods that we are receiving. So this is a credit transaction. We are not receiving cash. We were receiving goods from Gerard, $6,000 check. So we pay $6,000 check to receive goods from Gerard. So you come here on the 3rd of July. Take note, because this is where you stopped. If you come to this credit side, the first entry, don't say, I will put it here. Don't put it here. Don't say, let me come and put it here. No, you will come to the first line and put your thought or the date of the transaction that affect the credit side. So on the 3rd of July, we pay $6,000 check bank. That is, we pay $6,000. We pay $6,000 using our bank to Mr. Gerard. That is that. Simple as that. We receive goods and pay Mr. Gerard $6,000 by check. That is bank column. Very simple as that. Then the 4th transaction is purchase. We purchase goods, $4,000 cash. So we are buying goods and we are giving out cash. So cash book is not, what cash book is all about is the movement of the cash. The in and out movement of the cash. Inflow and outflow of the cash. Not the goods. This cash is going because of purchase. So this is a credit transaction under cash column. Now you come to your credit side, you put the date, which is the 4th date of July. We give out cash, $4,000 to purchase. I hope that is clear. How is clear? Yes, it's clear. Now, on the 5th transaction, cash banked. Cash banked. It looks somehow confusing, but it is very clear. In cash book, there is what we call contra entry. This contra entry means the circulation of the transaction. You remove money and put it again to the company. So you do not buy, you do not purchase, you do not pay for. Any transaction that is not maybe you're buying or you're selling, then you take out, you remove your cash and put it in the bank is called contra entry, and it will affect the board side of the account because you have taken out your cash and put it in the bank. It will show that the cash have gone and the bank have received the cash. So that is simple as that, and it's called contra entry. Now let's do it. Cash bank. We remove our cash and put it in the bank, which is $5,000. Listen very attentively. Students get confused with contra entry, how to treat the entry. Now, cash bank. We remove cash. That is, our cash is going. Our cash is going, and bank is receiving. So since bank is receiving, bank is at the debit side. Bank is receiving $5,000. Bank is receiving $5,000 through cash. I hope you are getting it. Through cash on the 5th of July. Bank is receiving cash $5,000 on the 5th of July. So you contra it, you put your sign of contra entry to know that this is a contra entry transaction at the folio side. Now, at the folio column. Now, cash is going to bank, meaning cash is at the credit side. Cash is moving to the bank. Cash is going of how much? $5,000 to bank. On the 5th day of July. Very simple. Very simple. Now, let's go to the 6th transaction. Received check for goods sold to Jerry, $8,000. We receive check. So this is a debit transaction. We receive check at the bank column on the 6th of July. We receive check, that is bank column, of $8,000 from Jerry Mod. That is that. On the 28th July, we pay for gas $9,000. We are paying. We are giving it out. The cash is going out. That is a credit transaction. We pay on the 20th of July. We pay cash. You go to your cash column. How much? $9,000. Because of gas. That is all. We go to the next transaction. On the 22nd of July, we still pay Mr. Ican. All his credit transaction, we're paying Mr. Ican by check, $11,000. On the 22nd of July, we pay by check at the bank column $11,000. $11,000 to Mr. Ican. That is very simple as that. On the 25th of July, we pay also. This is credit transaction. We pay $5,000 cash to the company's account. Since we're paying, we're not buying. So this is what. Let me pause a bit and see how we're going to do it. Then we'll continue. Okay, let's continue. On the 25th July, we pay $5,000 cash to the company's account. This is a contra entry. You are giving out money, and that money is still going to the company. So it's a contra entry. You do not pay because you're buying, or any transaction, but you are still putting it in the bank's account. So it's a contra entry. So here we paid $5,000 cash. Cash is going and to the company's account. Then the bank is coming to the bank account. That is debit. So you say on the 25th of July, we are receiving cash to company's account, which is at the bank column, of $5,000 through cash. So your contra entry sign to show that this transaction is a contra entry. It has balanced each other off. The money did not go out. It's still with us. Now, cash is going on the 25th of July. Your cash is going out of $5,000. $5,000 is going to the bank. It's going to the bank. So it's very simple. Cash book is very simple. Now, your contra entry is here, your contra entry. This fifth is contra entry. Okay, let's proceed. The 27th July, we pay salary. Paid salary, $2,000 cash. It's also a credit transaction because the cash is going and it is not check. So on the 27th of July, we are paying cash column of $2,000 because of salaries. So that is all about the cash book entries. This is how to enter your cash book. Now we are going to balance it. So in balancing your cash book, at times we also get confused because people or students normally mix it up. And the balancing of cash book is very simple. Now let's look at it. First thing that you need to know is you compare your debit side of the account with your credit side of the account whenever you are balancing an account. And since this is having two columns, you first of all compare the cash column of the debit side with that of the cash column of the credit side. Then you come and compare the bank column with that of the bank column of the credit side. That is all. Okay, let's do it. We say at the cash column, 20 plus 16, we have 36,000 for cash. We have 36,000. Okay, then we'll go to the credit side at the cash column. You add it up and compare. 4 plus 5, 9, plus 9, 18, plus 5, 23, plus 2, 25. You have 25,000 at the credit side. So, what do you need or what are you looking for? That if you put it here, it will give you the same amount. That is balancing. It will give you 36,000. So if you minus 36,000, if you minus 25,000 from 36,000, is whatever you get is your balancing amount that will balance off your account. What I'm saying is, we need to balance it to have the same figure. Your cash column at the debit side is 36,000. Your cash column at the credit side is 25,000. So, to get that amount that will make it to 36,000, you will minus 25 from 36 and add it to 25 to give you 36. This 0, 0, 0. 6 minus 5 is 1 and 1. So it is 11,000. We are looking for 11,000 to give us 36,000. So, and it is called balance carried down. You say at the end of this July, which is 31st of July, balance CD carried down of $11,000. Now, if you add it up, 11,000, if you add it up, 4 plus 5, 9, 18, 23, 25, 36. 20 plus 16, 36. So you have balanced the cash column at the debit and the cash column at the credit. We are left with the bank column at the debit and the bank column at the credit. So you add it up, the same thing. 30,000 plus 5, 35. 35 plus 8, 43. 35 plus 8, 43 plus 5, 48. Bank 48 at the debit side, 48,000. Then you come to the credit side, the same column, bank 6 plus 6,000 plus 11,000 will give you 17,000. You say 17,000. Then you minus 0, 0, 0. 8 minus 1 minus 7 is 1. 4 minus 1 is 3. So the balancing amount is 31,000, and we call it balance carried down. You put your 31,000 here. $31,000. So if you add it up, it will give you 46,000. Okay? It will give you 48,000. Now let's do it. Okay? You do like this. Straight line. In straight line. Do like this. Now, this is 2016, 20,000, 16,000, 36,000, 6,000. And this is 48,000. 36,000, 48,000. Very simple. 48,000. Okay. So, at the beginning of next month, which is August, the first day of August, this balance carried down, we brought it down. The 1st of August, balance BD brought down of at the cash column, we have 11,000. And at the bank column, we have 31,000. Simple as that. So this is telling us that the next month, August, we are having $11,000 at the cash column, and we are having $31,000 at the bank column. So it will appear like this. here will be for the cash, it will be 11,000. For the bank, it will be 31,000. So this is all about cash book. Our next video will be cash book on 3 column. That is 3 column cash book. Thank you so much. Please, if you're happy with what we're doing, subscribe to our YouTube channel, the Icon Success Academy, and click on the notification bell icon that will pop on so that whenever we release our videos, it will come to you. Thank you.